What's good, y'all? What's good? What's good? CEO Helmer, back with another video. Basically, I just wanted to piggyback off of my recent video that I made about the odd 50s. If you go to my previous video, I showed you guys how to take trades at odd 50s. You see it's 550, 750, 950, 150, 350, 550 again. For myself, how I trade US30 is only trading at these levels. And all I do is trade from level to level, boom, for 20,000 pips every single day. I like to use the 0.5, risking 30 pips, which is very tight. A 30 pip stop loss is very tight, but I am so confident in some of my trades. And I like to over leverage sometimes. So I would literally like to take that trade whenever I see fit. What I wanted to talk to you guys about today is some of the exits and entry points on smaller time frames. A lot of you had questions about some of, when would I enter the market when it comes to, M5 or M1. I also wanted to talk about risk to reward for a lot of you guys using funded accounts. But yeah, let's just get it. I also want to talk about these moving averages as well. So you'll see. So if we go to M5, right? Let's get to where we at today. So when we go to M5, I like to look at these moving averages that I have, which is nothing but the 66 moving average, simple moving average, 66. Q is the one who had put me on, Q Banks. He's the one that uses it. It works. A lot of people, for myself, used to look at the 66 on higher time frames, like the daily or the H1 or H4. Start looking at the 66 on smaller time frames, this M5 or M1. It works tremendously. It's used as basically a trend line, especially on M1. This other moving average I have is the 11 EMA exponential, which is EMA. Close 11. I just put it at pink just to throw the colors off just a little bit so it can keep me distracted as I'm looking at charts. But mainly when we looking at M5, I really want to pay attention to the 66, right? A lot of people had questions about what direction to take trades in. So what I usually do is look at the 66 moving average, and I say if we up under it, then I'm looking to take sales off of that. Right, boom, 70,000 pips. If we're above the 66 moving average, I'm looking for a candlestick to break above, and then when I come back and retest this moving average, then I want to take buys. But I also want to just trade at these odd 50 areas as well, right? So this day, let me put this back at 150. Just put this back at 150. So today I'm just going to show you guys a little bit of how to enter and when to exit, and what I like to do as far as risk to reward. So let's just start on this day, right? So we are on M5. Zoom out. So another thing is US30 is United States of America, top 30 companies. I could be wrong, but some of the most 30 top companies here in America, which usually opens in the morning of 7 o'clock, 8 o'clock, and that 9:30 opening. So to be trading during the time of Asian is not good. Even sometimes during London, stop wasting trades from 5 p.m. Eastern time to really, the open of London, which is that 3 a.m. Eastern time. London, London, you can possibly see some big moves, but we are talking about United States top companies here. The market is not going to move volatile until about 7 o'clock. 7 o'clock on my charts is this 1400 as you see down here. I don't look to take trades until this time. It keeps me from taking bad trades in between as Asian and London. I don't want to take those trades during Asian and London. I want to look when the volatile, when the market's going to move, right? So, and for myself, I usually like to take trades in the time of 8 to 8:30, right? Because I trade level to level. Big moves happen. I'm gonna keep this on 7 o'clock just to let you know that I'm only looking for trades on this side. So when I'm looking at this, right, my overall bias Right now, I would say, okay, 7 o'clock, we're floating above. What I like to tell myself is that when we break up under the 66 moving average, it usually pulled back to that 66 moving average, right? As you see right here, it pulled back. Or when I start to see it retest, and then a candlestick close up under it, I would like to sometimes just take that trade. At the bottom, you see it says 1510 down here, 1510. I would sometimes take that trade as we are breaking that 66 moving average. So my entry could have been right here, and take a point, use a 0.5 and get out, for that 22,000 pips. For myself, that's over $10,000, which is, I'm comfortable with $10,000 a day. Another thing is for you guys that I want you to understand when it comes to risk to reward. A lot of you guys daily drawdown. If you're on a 100K account, your 5% daily drawdown is $5,000. You cannot lose no more than $5,000 a day. So if $5,000 is your daily limit, you want to at least take 2 to 3 trades within that $5,000. So if we do the math and take 5,000 divided by 3, right? Because you want to at least get 3 setups a day. That's $1,666. I don't personally like that 666, so I cut it down to 1,500. So instead of 1,600, 1,666, I cut it down to 1,500. So 1,500 times 3 puts me at $4,500, which is $500 short from my daily drawdown limit, which I don't want to hit. Right? You cannot hit that, or your account will be blown. So what I tell myself is that if I'm using a 0.5, this is when a lot and a stop loss come in. That if I use a 0.5 and I know I want to use risk $1,500 per trade, my stop loss has to go at a 30 pip stop loss, right? So if I take my entry here, I'll take the entry here, right? And I'm using a 0.5, my stop loss has to go at 30 pips, which is tight, right? I just told you 30 pips is very tight. So my stop loss would be somewhere inside of here. But that would only put me at $1,500, right? So I'm only losing $1,500 if the market pulls back up to there and hit my stop loss. Right? Matter of fact, let me see. I think you can actually move this thing. So if we take the entry here, yeah, you can move this thing. Let me delete this. Matter of fact, I'm gonna change the color just so that you guys can see exactly what I'm talking about. So I'm gonna make it hot pink. Why not? So you see the number, you see it says 2,000, 2,700. So boom, about right there. So my entry would be here. My stop loss, if I'm using a 0.5, which I consider that over leveraging when I'm using a point, if I'm only on a 100K account, funded account, and my daily limit is 5%, this is kind of over leveraged because a 30 pip stop loss is kind of close. But when I'm doing it in my entries, I believe in myself. I'm confident in some of my entries. I don't need a lot of room on some of my entries, right? So I put it for 30 pips, which is kind of tight. Where my reward would be, right, the next level. Boom. See what I'm saying? Why would I take this trade? Because we're breaking the 66 moving average. And as we breaking, I'm looking, especially when this market closed up under this bearish candle, soon as we, came back, retested 66, they start to break up under these down here, up under these wicks. I'm taking that chance, right? I'm taking that chance. Boom. TP going all the way down here for 21,000 pips. For myself, that's over $10,000 a day. What I want you guys to do, I don't want to confuse you, but I want some of you guys to look at this. I'm deep down teach you some stuff that a lot of traders don't know, or a lot of mentors don't even discuss. On US30, I want you guys to start using 5,000 Boom, 5,000 pip stop loss, because you want to give it some room, right? If the market start to push more than 5,000, I know for sure, I have studied this market over and over. If it start to hit my stop loss, I know for sure I'm on the wrong side of the market. It's obvious in a buy trend. If it hits my stop loss, it's going to come back retest, and then once it retests, it's going to end up taking off and going up, creating that higher low and going to take off. I know for sure if a 5,000 pip stop loss gets hit, I'm in the wrong direction of that market. So what I want you guys to start doing is using a 5,000 pip stop loss. And if you are using that, if you are using the, 100K account, funded account, I want you to start using a 0.3. So if we use a 0.3, put our stop loss at 5,000 pips, that puts us at 1,500, right? Just like myself. Now I can use a 0.3 trade 3 different times, which will put me at 4,500. And also I get to move my stop loss higher, which gives it more room at 5,000 pips, right? But the reward is not going to be, 10,000. It's going to be 6,000. So if we take a 0.3, times 20,000, because we don't even want to look, we want to take a trade level to level. So 0.3 times 20,000 will put me at $6,000 a day, which gives my stop loss, a lot of room, which is 5,000. All right. So that's perfect. That's what I want you guys to start looking at. Even if you got to do this on a demo account to practice, start putting your stop loss at 5,000 pips and only using no more than a 0.3. Because if you use a 0.3 and put your stop loss at 5,000 pips, that gives you $1,500 that you can risk out of that 5,000 daily limit. You see what I'm saying? Practice this. So once we start to break up under the 66 moving average, for now, I'm not even going to talk about my 0.4 because I want you guys to start really using that 0.3. So 0.3, we broke up under, taking a sell, stop loss going for 5,000 pips. Next level will be my TP, 22,000 pips that I didn't gain. See what I'm saying? What time was this? So now you see we are floating up under the 66 moving average. Yeah, you can try to guess. This is why I don't look to take buys when we are up under the 66 moving average. Because soon as it hit, most of you guys would have tried to take a buy. Especially for myself, my stop loss that's why I say 30 pips is tight. Look at here. 30 pips for myself is tight. But I get down and greedy. I get down and on smaller time frames. See, if I took a buy, pay attention now. If I had took a buy, risking that using that 0.5 at 750, my stop loss would have been here, which would have got hit. You see what I'm saying? That's why I say 30 is kind of tight. But for myself, I know exactly what I'm doing. I'll scale down. I'll make sure I see, momentum pushing up from M1. 30 pips is tight. But for you guys, I want you to start using 5,000, using a 0.3. So now I can just take that at, 750. Boom, 750 get hit. I can just automatically take it because my stop loss is going at 5,000 pips. And believe me, I have studied this market over and over before. If it pushes for more than 5,000 pips on a stop loss, you most likely are on the wrong side of the market. So you can take that at 750, put your stop loss at 5,000. Reward can go where? Next level. Back. We already see we broke up under the 66 moving average. Where did it go? Back to the 66 moving average. The 66 is powerful, bro. I'm telling you. That's another winning trade. I'm telling you, man, you could do this all day, man. All day. Take your trade at the 75. It got hit. Boom. 20,000 pips. Using a 0.3, $6,000 a day. Even over here. Now, we playing in between these. I say, okay, we up under the 66 moving average. I can tell myself, okay, once we start to break up under, which candle verified momentum breaking up under is this one. We broke up under on this candlestick. Boom, broke up under, right? We are also what? We broke through the 11 moving average, came back. My entry would have honestly been up here just based off, me and having experience in the market. My entry would have been here, right? We broke powerful through this 11 moving average. This is nothing but a retest. Bearish candle broke through the 11 move EMA, retest, retest, retest. Boom, gone. So my entry would have been a little higher, or you can be patient and wait for this bearish momentum candlestick to break 750. Once we break 750, I already know it's going to pull back. And once it pull back, let's do it again. Once we pull back, stop loss going where? Let me delete this real quick. Stop loss going where? If we're using a 0.3, 5,000 pips. Make it red or pink. Stop loss go 5,000 pips. TP go where? Next level for 20,000. Boom. See what I'm saying? This is easy stuff, bro. All you have to do is pay attention. Pay attention to the 66 moving average. If we're up under, then most likely we're going to flow up under, right? On M5, stop loss go entry right here. Stop loss go 5,000, which gives it enough room. You would have been in drawdown a couple pips. But regardless, we know that this 5,000 pip stop loss using a 0.3 puts us at how many dollars? $1,500. How many times can we lose this $1,500 trade for our daily limit? We can lose 3 different trades before coming close to our daily limit. 1,500 times 3 puts us at 45. So if our daily limit is 5% on a 100K account, that means that we can take 3 different trades and lose those and still be okay. If I lose 3 different trades in one day, obviously my psychology is totally wrong. I'm guessing at that point, and I need to really wait. If I lose 3 trades in a day, I need to stop trading and wait for the next day. By the rules, I technically have to stop trading if I lose 3 different trades using that 0.3, risking $1,500. I have to stop, right? So you shouldn't be losing 3 trades back to back if you're waiting on these levels to be touched or broken, or following the 66 moving average. You should be good, especially trading after 7 o'clock is when the volatility comes. You could be taking those trades up, even up here. We retest this moving average, take a sell, stop loss go where? 5,000 pips. Boom. TP goes back to level. Or this one, for this one, since I see it was a big push off for 66, I can almost hold this one for 40,000 pips, right? Did it get hit? Yes, we had some pullback up in this area. But did it get hit? Yes. There'll be times where you can hold it for 40,000 pips, especially this big push off to 66. Like I say, when the volatility start to come at 9:30, look, it says 1640 at the bottom. You see 1640, 1645. That's that 9:30 opening. 9:30 was right here. This is when the market goes crazy, right? This is when it goes crazy. So when 10 o'clock is coming around, 10 o'clock is usually going to follow through with the 9:30. That 9:30 is usually a big pullback or whatever it may be. We are at our level, 950, take a sell, stop loss go 5,000 pips for $1,500 that we're risking. TP could be at this next level. We also are, why did I take the sell? Because we're up under the 66 moving average, right? Take the sell. We're up under, we retest the 66. Take the sell. Stop loss can go, TP can go for 20,000 pips, or you can, if you risky and you feel confident, go for 40,000 pips. Eventually, we want to get to the point where we can put one lot on here. A lot of these people who are driving Ferraris and driving Lamborghinis, they're putting, a couple 1 lots on here, 2 or 3 lots. So let's say, for instance, we use a 3 lot. That's 40,000 pips. So 40 times 3 is what? $120,000 a day. So it's very capable of getting done. $120,000 is easy. $120,000 a day can get done. You see people driving Lamborghinis and everything else. That's the overall goal for us, or for you guys, for that's using funded accounts. Our duty is to get this trade to here, take that $6,000 on fund it, and after, I think you have to wait like 4 weeks. If you can make $6,000 a day, let's do the math. $6,000 a day times 5 puts you at $30,000 a week. Times that by 4, because you have to wait 4 weeks and actually get the request funded. So that puts you at $120,000 after 4 weeks. Take that 140,000. I mean, that 120,000. You ain't even got to take the whole 120,000. Take 180 to 100,000 of that and put into a live account. That way, that daily limit doesn't matter anymore. Now, if I have personally, if I have $100,000 in my account, I'm willing to risk $5,000. Honestly, that's what I'm saying. I'm willing to risk $10,000. So my stop loss will be up here somewhere. Now I don't even have to really worry about a good entry. I take the trade right here and go play basketball, because I gave it a lot of room now to make its room if it did want to pull back. TP would still go for here for $20,000 if I'm using a one lot, or I can hold it for the $40,000. See what I'm saying? If I lose $10,000 on my live account and I have over 100K in my account, that's nothing. That's nothing. I don't care about that, right? That's not nothing I'm stressed out about. I can lose if I have a huge account like that. $10,000 that's nothing. Like let's go back and look at some more, man, because I want to teach you guys this. So we don't want to trade, during Asian 7 o'clock. Like I said, I like to trade around 5. So this is 7:30, 14:30. So when 5 o'clock came around, boom, 5 o'clock came around. What are we doing? We look like we are above the 66 moving average, but overall we are in a downtrend. You can clearly see we are in a downtrend. So I know for sure I don't want to take any buys, right? We are clearly flowing down. So the only place I would truly want to take a buy will be at my quarter level. When 5 o'clock come around, 5:30 come around, and we are not at this quarter level, I don't want to take trades. That's the whole strategy, is to only take these trades at these levels, right? So when we did come down here, I would say, okay, I would probably want to take a buy, even though we are up under the 66 moving average. I would have said something in my head, would have said, okay, we could possibly break through the 66 moving average if we can find some momentum. Because what do we know? We know that 930, which is here, 930 on the dot, usually pull back. It's usually a hard pullback. If it's already a downtrend, this 930 is going to pull back and take all those people who were in that downtrend. It's going to go back and hit some of their stop loss. So overall, I know I can take this risky buy, right? Stop loss goes where? 5,000 pips, which will put us at 1,500. TP go where? Came close, actually pulled all the way back down. But there, boom. Or don't be greedy. Sometimes for myself, sometimes I don't actually put my stop loss on 150. I would put it just below it, or like 2 or 3 pips, sometimes even 4 pips below it. So that way, if I know if I walk away from the chart, then yeah, I can just get out. So yeah, stop loss goes 50 pips. This is another winning trade. Boom. Hit. And this is just waiting on this to get hit. Boom. Stop loss go 50 pips, which I told you is a great amount of room. If the market start to push past 50 pips, you are obviously in the wrong direction. Right? So look, boom. Stop loss go there. TP goes up here for 20,000 pips. That's $6,000 if you're using a 0.3. That's another winning trade. Right? Boom. Has some big push off. I only want to take trades at these levels, right? So when it did come back up here, I could take another risk, right? Especially if looking at the previous day. This is another thing that I want you guys to see. Look, we have some rejection going on right here. Broke through, rejection, support, 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 broke through, resistance a little bit, came down some more, resistance. You know, couldn't get through, came back up. I would have said, okay, I'm taking this third resistance. Tried to get back up there once, tried to get back up there twice, came back. Ah, shoot. Let me put it on 150. Came back, try to hit this 150. It actually touched it again. I would have took my chances there. Boom. Stop loss go where? 5,000. Boom, somewhere around there. TP goes where? Next level. It doesn't matter. And I don't want to say it doesn't matter, but like sometimes it doesn't even matter which direction to take trades. You can catch this. It only matter when you're trying to catch bigger trades for 40 plus lots, right? I mean, for 20 plus lots, right? I can sit here. This is nothing but level to level, back and forth. You're going to get a lot of consolidation days, right? Every day is not going to be a straight trending day. You're going to get a lot of consolidation days. But this is basically traded from this level to that level back to this level. See what I'm saying? You're going to have days where you can try to catch 40,000 pips. Like here, you could have held it a little bit more than, you could have held it for, all the way down here for 32,000 pips, right? But for right now, we just want to trade level to level, get our $6,000 and be done until we can get funded and go live and really be able to hold trades for longer. So that's a winning trade. Waiting on these levels to get hit after 8 o'clock. If 8 o'clock come around or 8:30 come around and we're not at a level, I don't want to take a trade, right? Came down, take a trade, stop loss go 5,000 pips, 0.3, $6,000 next level, winning trade. Let's go inside of here. What do we know? We don't want to trick it. We don't want to take no trades during what? Asian and in London. We want to take trades only when the opening. Look how much fat more. Look how much powerful it moves during this opening of New York session, right? Let's stick to the rules. Let's see what we got. We don't want to take a trade before 7 p.m. I mean 7 a.m. Eastern time. So this is about 7:30, right? I like to get on the charts around 7:30. What do we see? Or sometimes you can even look and see what London did, right? London was straight giving us downtrend. Boom, downtrend momentum. You can even put it like something like this. Boom. Right, we was floating down during London. 7:30 came. I like I said, sometimes I like to trade around 8 o'clock. What 8 o'clock do? The 8 o'clock push. 8 o'clock is right here. The 8 o'clock touched a I-50. No. What is 8 o'clock doing? Floating up under the 66. I mean, it's floating up under the 66, but it's also floating up under the 11. We broke through the 11 right here. Boom. We came back, retested. We just floating up under. Nothing is telling me to buy yet, right? Nothing is telling me to buy. We are still floating. Look at all these retests at this 11 EMA. Nothing is telling me to buy. Nothing is telling me to buy. We know that 930 goes wild. What did 930 do? Push all the way back up. Boom. This candlestick broke through this 11 moving average, right? We already been in a downtrend during Asian and London. I'm looking for a reversal to happen, honestly. Trading psychology, this is one thing, like, I can't really explain it. It just comes with practice. We've been floating down. It can look how, even the day before, it's been floating down for too long. The market is not just going to flow down all day long, right? That way, if it did, everybody would be millionaires, right? So when 930, my mindset is that I'm assuming that this 930 is going to break. But let me show you how my entry would go. This candlestick is what broke the 11, which is great. That's what I want to see. I want to see a pullback to the 11 and hold. Boom. Pull back to the 11. It held. Another pullback to the 11, held. Gave us another pullback to the 11 and held. So my mindset is that, okay, once we start to break, I know for sure this 950 is going to get hit. My mindset is already looking from here to here. That's the entry I'm looking for. I'm looking for this moving average, this trend line to get broken. I'm looking for us to break through the 66. We came back, retested 66, and pulled back and couldn't break through the 11. So honestly, if it was up to me, my trade, especially knowing that this was the 6:30, and then even at what time is this? 6:35, we couldn't even get through the 11. 6:40, we couldn't get through 11. My trade would have been somewhere down here, looking for buy. What's another confluence we can add? Another confluence we can add is the Fib. Boom. See what I'm saying? This huge momentum bullish candlestick was a whole it's screaming reversal. We've been going down, reversal. If I had the volume on, you will see a big long white candlestick going up because it's a reversal is happening. Let me turn this green off. So this is an indicator. We broke above this 11 moving average. I don't know why it's not working. We broke above this 11 EMA. I taught this. If you go back and look at some of my previous videos, I teach this strategy. Bullish. The first bearish candle was right here. So when we first get that, when we have bullish, bearish, I taught this in a 1 minute strategy. I want to take a trade where inside of my 50 or 61.8 area. I teach this. Go look at some of my previous videos. I teach this. My entry would have been inside of here, right? And my overall mindset, yes, I didn't take it at the 750, but this is just trading psychology. We broke this powerful bullish candle, breaking above this 11. We've been flowing down. This is also the 930 opening. My mindset is that we're finna go up. We're finna go check out all these stop losses that all these sellers were in, this day or the day before. And look what happened. It actually did. But look, this is another just more confluence. Fibonacci, we got bullish momentum, first bearish. So 100 here, 0 at the top, pull back where to our 50 to 61.8 area. So my entry would have been in there. Stop loss go where? 5,000 pips or 50 pips. Let's change the color real quick. Boom. Hold on. TP go where? TP can go, depending on how greedy you want to be or how much you want to make. Your TP could have been at 750, right? Don't get me wrong. Your entry could have been here to there, 5,000, which is, a good amount of pips depending on what your lot is. But we know that the market pushes from level to level. If we break through this level, what's the next level is going to? Here for 20,000 pips. Now that we have a great entry because of more confluence, we broke through the 11, came back, retested, then break. Now we are at the 50 on a fib too as well. Take it. Stop loss go 5,000 pips. TP goes for 25,000 pips. That's about $7,000 if you're using a 0.3. That's a winning trade. That's a winning trade. This is what I'm literally thinking when I'm on the chart. I'm showing you guys everything that I know. I'm showing you. Even up here, let's look at some of this stuff up here. And this is something, this is another thing. Look at all this momentum that it pushed up. It only pushed up 1, 2, 3. And 3 candles, it broke and got to here and actually went a little bit above, right? Look at this. We understand that a pullback has to happen. If you see all this bullish momentum, the market has to pull back. We understand as traders, the market does something like this. Boom, boom, right? Look like a stairs. Breakthrough, pull back. And then once it pulled back, what it do? Break through that higher high. What does it do? Go back and retest that higher high. And it just continue. That's a trend. That's a wave. So for you who are thinking to take this sell, right? Take this sell here, or take a buy here. That's not a good buy, bro. We just broke. We pushed from this level to this level. We know a pullback has to happen. So they would be trying to be greedy and take another buy. That's kind of risky. I don't want to take that risk, right? If anything, I would want to take a sell. It probably would have been a losing sell. Look, 5,000 got hit. Boom. That would have been a losing trade. But just trading psychology, bro. You don't want to take that buy or sell, especially after this big move. This is a big, you pull out the fib, bullish momentum. We start to see what? True bearish momentum here. This is really the bearish pressure. We got bullish pressure. We got bearish pressure. Go back and look at that M1 strategy in my YouTube channel. I talked about the bullish and the bears and how to use the M1 strategy. We got bull, we got bear, and what did I say as far as this strategy? We only want to take this trade inside of the 50 to 61.8. So once it hit the 50, I'm taking another buy. Boom. Take the buy at the 50. Stop loss go where? 5,000 pips. TP go where? TP go, TP can be here back to 950, or you could just be confident and say it's going to the next level to level. Why? Because we've seen a big bullish momentum push from 750, went to 950, but we understand a pullback has to happen, right? So the pullback happened. We pulled out our fib. Where did we come to? I got this backwards. Hold on. I want to make this color so I won't be confused. I don't want to confuse you guys too. Pullback happened. Pulled out our fib. Market came back to our 50 to 61.8. If you watch my previous, this is nothing. This is exactly what's going on. Big bullish momentum, bearish momentum, 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 bullish momentum, bearish momentum. It's nothing but creating higher lows, higher low, higher low, and eventually we know a reversal is going to happen. But we already know that we broke through this 950, right? The showed us a bullish was in the market. Bears pushed it back for a retest, came back to our Fibonacci 50. We taking this buy where to our next level, or if anything, take it to the 50, take it to the Fibonacci 27 extension. We know that the 27 extension is a TP area, right? So that's still 25,000 pips that you just caught based off look, what's another thing that we see? We clearly see we are pushing above the 66 moving average. You see this? We are above the 66 moving average. Another way that you could have entered instead of if you don't understand the fib, what else do we know about this 11 moving average? Like I say, I have multiple styles. I have been doing this for years. I ain't gonna say years, last 2 years. But I taught myself everything that I'm showing you guys. Nobody really taught me this stuff. I lost thousands and thousands of dollars because I made mistakes, but I have learned from all those mistakes. This 11 moving average, we are clearly up under. When we are up under this 11 moving average, it usually flows. It don't break up and down. A lot of these people use some of the wrong moving averages. It's confusing. This 11 helps on M5. We are up under, retest. Nothing is pushing above. Even these lights, it's not a good push above. So another good entry, even if you didn't understand, the Fibonacci, another good entry was something like this. We clearly broke above here. Boom. This candlestick right here. This candlestick right here, which happened at 12:30, broke clearly above the 11 moving average. So even if you didn't understand, the Fibonacci or where to enter at, whatnot, you could have said, okay, we broke above the 11 moving average. If we can get a retest back to the 11 moving average, I'm going to take that trade. Or you can say once we break above that candlestick, now I'm looking to take the trade. So now Entry could have been something like this. I'm gonna say pullback because I like to only enter on pullbacks. Yes, we broke above the 11, and like for myself, I trust this 11 a lot. So if we pull back to the 11, I want to take that. Plus, I don't want to be in drawdown as much, right? So I'm taking it once we pull back to the 11. Stop loss go here. Stop loss goes where 5,000 pips. Boom. When we take this entry right here, that stop loss is great. We went straight into profit, honestly, right? You see what I'm saying? Entry would have been right here because why? We broke above the 11, pull back here, boom, pips, 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 20,000 pips. I'm looking to get out, or like I said, you can hold it to next level. That's 25,000 pips that you just made. We're above the 66 moving average. If you pull out your fib, if you understand the fib, bullish momentum. We got some bearish momentum right here. If you go back and look at my old videos, it came down to the 50 to 61.8 area, which I'm looking to take a trade. Boom, I'm already in a trade before we even take a trade here. Could you possibly have took another entry? Yes, bro. Like, look at this. What do we do on this candlestick right here? We broke above the 950. We broke above 950 on this candlestick. Once we broke above and we came back and retested it, take a trade. That could have been another buy opportunity. Don't get greedy now. Don't get the stacking orders, but like this is another buy opportunity if you missed all these opportunities down here. Broke above, closed above, came back, retest. Boom. Stop loss go for 5,000 pips, which is right there where it basically at. TP goes where? Next level. It's at 140. 150. Boom. TP smacked. That's a winning trade. That's a winning trade. Let's look at some more before I get off here. I just wanted to show you guys a little bit of what I'm looking for. So let's get on here. So we don't want to take a trade. So 8 o'clock came around. 8 o'clock came around. What do we clearly see? It's the same thing we just said over here. What was we doing during Asian and London? Downtrend. Clearly, we know the 930 likes to pull back and knock out all these buys that people was taking. It likes to go hunt their stop loss, right? So when 8 o'clock came around, we are clearly still above the moving average at the 66 moving average. So I'm not looking to take a sell yet, right? This one news spike heavy on this one, and it actually didn't happen around 9 o'clock. So this probably would have been probably a losing trade, because honestly, a trade for me would have been so right here we broke through the 150. So I probably would have been looking to take a sell right here, which is not bad. You know, came up 8,000 pips, but look at this big pullback. It is more than that 5,000. So this would have been probably a losing trade, because I'm not going to say I win every trade. This would have been a losing trade, but the confirmation was there. Broke up under, closed up under, came back, retest. Stop loss goes 5,000 pips. TP would have been down here. This was a losing trade, right? Boom, losing trade. But it's cool. We're not going to win them all. And if anything, listen. If anything, I have 2 more opportunities to take this, $1,500 trade, right? This is a losing trade. Oh, shoot. Yes, this is a losing trade, but how much money did I just lose? I only lost $1,500, which means I still have what, $3,500 to play with. See what I'm saying? This was a losing trade. Why? Because once it did break up under, it pushed down in our direction, came back, hit our $5,000 stop loss. Boom. This is a losing trade. I'm gonna exit out. Losing trade. But for myself, I'm not gonna, get out of it. If anything, I would have said, okay, for myself, just for me being, great at trading. I ain't gonna say great at trading, but having an understanding of trading, I would have said, okay, this was just to go hit these double top. So you have a double top here, here. Those people who took that sell right here, they're gonna go hit their stop loss. And most of those people usually put a tight stop loss like myself, which would be probably 30,000 pips, because they put major lots on it. They put bigger lots, especially the banks. So all they did was go hit their stop loss. And once I seen confluence something like this, breaking through this moving average here, boom. Could have took a sell right there, or even here. Boom. See what I'm saying? Boom, boom, either one, or I could have waited, more confirmation. Like I said, I'd go down to M1 sometimes, and it would show me a close up under 150, retest 150, and go, right? So I'm not even gonna lock in on it. This probably would have been just a losing trade, but even if you lose this one trade, you lost $1,500, and your daily limit is 5,000. You still got two more opportunities to take trades. So yes, you could try to catch more setups like this. If you go back and watch my M1 strategy, look at this. Boom. We have bearish momentum, bullish momentum. Our entry would have been somewhere inside of here. I'm looking to take a trade from here, 5,000 pips. Get out. Stop loss right here. It never came up to 5,000, so another entry could have been right there. TP could have went down to here. That's just 25,000. I'm not gonna go more on it. If you want to look at it, go back and watch it. Just more opportunities of how to trade. So that probably would have been a losing day, but you still had two more opportunities to trade. Boom. It's not gonna hurt you. All right, let's look at some more. We only want to trade, 7:30 to 8. 7:30 to 8. What do we do? We clearly see we are flowing up under the 66 moving average. The day before we had some big bullish momentum, right? So we know we are pulling back for retest, which have been dropping. We clearly see we are up under the 66 moving average. When 7:30 came, we are not at a key level, right? 8 o'clock came, we are not at this key level. We are not at that level or I-50 level. When I say key level, I'm saying I-50. We're not at that level. We're not at this level. When the market did come back, boom, you could have took the trade, sell, right? You could have took a sell because this looked like it's a strong downtrend. We are also flowing up under the 66 moving average. Believe me, bro, if it breaks up under the 66 moving average, it hasn't been retouched. It hasn't been retouched. It hasn't been retouched. This was the first retouch. And usually when it retests and retouch it, that 66 moving average, that first retouch is going to usually push. You see, you'll get a few times it push off the moving average, right? Before it actually breaks through, right? It'll retouch it. So my mindset is that when it does come back to retouch the 66 moving average, I'm already looking to take a sell. So my entry would have been somewhere like right here. Stop loss would have been 5,000 pips, which didn't get hit. TP would have got where? Next level. See what I'm saying? Easy trading. Using a 0.3. I'm making this pink. Stop loss, did it get hit? No. Went in trade, $6,000 we just made. TP could have been right here. It doesn't matter if you took it at the 150 or you could have waited on a 66 moving average to get hit. Regardless, 5,000 pips is up here for $1,500. Never got touched. Went in trade. Boom. Could you have possibly took this buy? Yeah, if you want to, I'm not telling you when not to take buys and when to take sales. I'm just showing you guys of how powerful these odd 50 levels are. Resistance, resistance, resistance. And it didn't get the full 20, but you see what I'm saying? This could have been a winning trade, depending on how much you're looking. But you gotta just understand psychology is big. It's everything, bro, when it comes to just trading. You're counter trending this. Like for now, me trying to take this buy, I'm counter trending, which means for myself, I can't be in it too long, right? I can't be in it too long because we were flowing up under the 66 moving average. If anything, I want to take a trade back to the 66 moving average, which is great, right? I'm risking 5,000 pips, right? So if I'm risking 5,000 pips, A safe, comfortable spot would be, $10,000 TP, which is somewhere in here. Or I can say a 1 and 3, which is at 1,500, which did get hit. You don't always got to catch a 1 or 4, right? We don't always got to be that greedy. A 1 and 3 would work too as well. Came down, hit it. Stop loss go 5,000 pips, $15,000 that we risking. We made it back. We made more than that when we went to only 15,000 pips, right? So that's a 1 in trade. That's $4,500, right? Yeah, that's $4,500. 4,000, 5,000, 4,000, $4,500, which is a 1 in trade, which is great. I'm gonna do one more before I get off here. I just wanted you guys to see some of the stuff that I'm thinking about, right? Some of the stuff that I see when I'm trading or what I'm looking for. And this was a great opportunity. We've been playing around at 66 moving average, playing around, playing around. I'm looking for this candlestick right here. Yep. Matter of fact, I want to point that out. 4:30, 7:30, 14:30 is 7:30. I want to take trades after this. We was flowing up above the 66. Now we starting to get some downtrend momentum. We're seeing this big bearish candlestick broke. For myself, I would have said, okay, once it pulled back, I'm looking to take a trade. It could have been here, or for myself, I could have said somewhere inside of here, looking for more structure. See, up here somewhere. So when it came up here, I could have, for myself, like, just get good at it, bro. Practice this stuff. Learn everything. I had to learn everything from scratch. You can learn it too. You got it. Hit me if you got questions. My entry would have been up here, right? I wouldn't have had to take the trade exactly at 950, but my entry would have been up here. Let's just forget it. I don't want to confuse you. Let's just take levels at these odd 50s. As you progress and learn this structure more, your entries would be even better. For myself, I have to learn this. That's for myself. I have to learn this, how to get in on pullbacks, because I like to over leverage. Simple as that. If I take this entry right here, 3,000 was almost touched. You see what I'm saying? 3,000 is almost touched. I probably would have lost this trade. But from my own understanding of what markets like to do, I would have said something like this. Boom. Or if anything, something like this. Because I see broke above, boom, retest, broke above, retest, playing around, retest, retest, retest. So if we did come back up, now I take myself with that 0.5, stop loss go for 30 pips, which didn't get touched. And my TP go down here for $20,000 for $10,000 with my 0.5. As you get good, you'll get better with entries. But let's stick to our rules now. So we had a big bearish momentum candlestick that broke. So once it did pull back to 950, TP going at where? 750. Stop loss goes where? Put this down there. Stop loss goes where? $5,000. I said 5,000. 5,000 pips. Did it get hit? No. Is it a winning trade? Yes. It's a winning trade. Using a 0.3. Boom. Get out of there. Are we breaking up under the 66 moving average? Yes. Could you have been confident, right? Because you already know 930, which is right here, 930, we could have said, okay, 930, what do? We are up under the 11, still floating up under 11. I could have held this to the next level until I start to see some breakage. Even right here, I would have still held it because I know it has to come back and retest this level. This could have been another solid entry to take another sip. Boom, for 20,000 pips. But you could have held this one, for 40,000. For myself, I probably would have just took the 20,000, $6,000 if I'm using a 0.3, or $10,000 if I'm using a 0.5, and I'm done for the day. That's all I need. That's good money, right? I'm out the market $5,000 pips. Did it get touched? No. Great area, great trade. Another entry could have been over here. I had a big deep pullback. Look at these candlesticks right here. This one that broke above. Boom. What else are we doing? What else are we doing? Flowing above the 11 EMA. So like I say, when this EMA sometimes get broken right here, it usually pull back and retests it. So you could have took that buy. You could have took the buy down here. It just pushed for 40,000 pips. You know a retest has to come. Boom. Stop loss goes where? 5,000 pips. 5,000 pips. TP goes where? Boom. Like I say, sometimes it doesn't even matter about the overall direction. If you just wait and understand moving averages, smaller time frames, you can catch pips all day. Boom. 20,000 pips got touched. Broke above, continue to break above. Retested 66 moving average. We also know that we have to come back and retest 750. Even right here, I probably would have been aggressive and took another sell. Took another buy. Once we broke above on this bullish candlestick, I probably would have took another buy. Hell of a aggressive move, but who cares? We only risking $1,500. I can risk it. I don't care about $1,500. Boom. That's another winning trade. Just trading from level to level and understanding Fibonacci's. Not Fibonacci's. Understanding moving averages, understanding price action, understanding candlesticks analysis. Only trading during the New York opening. There's no reason for me to be trading during. Look at all this consolidation during Asian and London. I don't care about this. It only pushed for one level. Look what happened when Asian opened. When New York opened at 7:30. It pushed one level, two level, back to that level, and kept going to another level. Trade when the volatility come in. Trade up to 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock. Trade during those times, and it will save you a lot of trouble, bro. I'm telling you. Look at this. I'm about to get off of here, but I just want to show you. Broke up under the 66 moving average. Broke up under the 66 moving average. Broke up under the 150. What did it do when it came back? Retest the 150. Entry. Also, look, we broke up under the 11. Everything is screaming, take a sell there. Everything is screaming, take a sell there. I don't know what time it is, but I know it's during Asia. It's doing New York, sometime in New York. Boom. Everything is screaming, take a sell. I want you guys to practice this, man. If you can. Oh, shoot. Hold on. I'm just messing up stuff now. Practice this stuff. Hit me if you got questions. I like helping. I want you guys to all win. I want to see everybody winning in the markets. There's no reasons for us to be losing. I'm going to get this right before we get off of here. I don't know why it's acting funny, but we're going to get this right before we get off. I'm just showing you this is another winning trade. Just looking at moving averages and stuff. What time was this to happen? 6:30, exactly. 6:30. We know something that's powerful going to happen. We're in an uptrend, small uptrend. Boom. We's floating up. We got a break of the uptrend, retest of that trend line. Push broke up under the 50. Strong bullish candlestick too. Look, it was trying to go up and got rejected. Strong broke up under the 66 moving average. Came back, retested 150, retested 150 twice. Sell, stop loss goes 5,000 pips, which was never touched. TP goes next level, 6,000 pips. $6,000 that we gain if we're using a 0.3. If you're using a one lot, $20,000 a day. Could have held because we broke up under the 66 moving average. A big push is going to happen. Could have held it for 40,000 pips. which eventually, like I say, eventually the goal is to hold stuff for 40,000 pips, which is $40,000. For myself, I'm trying to throw at least 3 to 4 lots on that. So it's $120,000 a day, $160,000 a day. That's a blessing. That's a blessing. Stop loss still goes for, $10,000, $5,000. See what I'm saying? But you got to realize when you start adding lots, don't get confused. When you start adding more lots, the tighter your stop loss has to be, because if you start adding too many lots, you can't risk all this money for 5,000 pips, right? That's too much money if you're using, a couple standard lots on US30. That's too much. That's too much. That's 5,000 pips, even if you just use one lot. Like I say, if I use a 0.5 and put my stop loss at 5,000 pips, if I'm using a 0.5 and put my stop loss at 5,000 pips, that's 200. That's 250,000. I mean, not 200. That's $2,500 that I'm risking. If I'm using a 0.5 here and putting it at 50 lots, 50 pips, 5,000 pips stop loss, that's $2,500 that I'm risking. I don't want to do that, because that means I can only basically truly only take that one trade per day, right? I don't want to do that. That's too much. That's too much money that I'm risking, especially on funded accounts. If I'm on my live account, yes, I take that any day. I don't care about, on a live account, I don't care about that. But on a funded account, using a 0.5 risking 50 pips or 5,000 pips, that's $2,500 out of that 5,000 that I have to risk. Half of that 5,000 is 250,000. That means I can only take 2 trades, and actually that second trade I can't hit 5,000, so I have to cut down that stop loss automatically, so that I won't go over that 5,000 limit. So you just have to be careful. The more lots that you try to be greedy and add on right here, the tighter your stop loss has to come, which means it's going to most likely lose, because the tighter the stop loss, the more room you don't allow it to have. 50 pips or 5,000 pips gives it a good amount of stop loss. It gives it enough room to make moves. It's going to be times when the market come close to that 5,000. And like I said, if it hit that 5,000, obviously you're on the wrong side of the market. We seen an instance where 3,000 was hit. Like I say, sometimes I have to get a good entry, because sometimes 3,000 is too close. Just practice this stuff, man. Practice it. Wait on confirmation. Wait on confirmation candles to break through. Broke through 66, broke through 150, broke through the 11. Retest entry here. 5,000. Boom. TP smacked. TP2 smacked. Practice this stuff, man. I'm out. I'm gonna leave y'all alone, man. Just practice. I just wanted to show you guys some of the stuff that I've seen in the market. I just wanted to help you with entries, exits, and risk to reward ratio when it comes to trading US30. Follow me on Instagram. My personal Instagram is CEO Murr, SEO MURR_, or you can follow my trading page, which is Hail Murray, HAILMURRAY_. Hit me on Telegram. It's Deontay Murray. You can find my name anywhere. Try to figure it out. I think I actually posted in the bio or the description below. But yeah, subscribe. I'm trying to post as much content. I actually have another strategy that I'm working on right now to allow myself to gain 50,000 pips, or 50,000 pips a day, which is 5,000. I don't want to confuse you. 50,000 pips, not 5,000. I'm working on a strategy now to catch those big overall H4 big moves. I'll show it later on, but just practice this now. For now, this one odd 50, 150. This allow you to make 20,000 pips a day, which eventually the goal would be to make $20,000 a day, or depending on if you're on the live account or funded account, you can make $10,000 using a 0.5, or $6,000 is still great money. It's still $30,000 in a week. That's still great money. So yeah, I'm out, man. God bless you guys. If you got any comments, drop them below. Please share this with family and friends. I'm giving you guys free content that most mentors are not going to share with you guys. Spend a lot of mentors is not sharing the truth. And all I'm doing is setting it free, letting everybody know exactly how I trade, what I look for, and helping as many people as I can. So, man, if you can, give it a like, give it a share, subscribe, share with your family members, how to quit your jobs. Anybody is capable of just looking to the right, looking at numbers and candlesticks. So, yeah, I'm out, y'all. Much love. Appreciate you guys watching. All right, I'm out. Peace.